Good morning. I'm delighted to be here. I'm glad to join Finno Summit and talk about Fintech for Inclusion. My name is Michael Schlein. I'm the CEO of Accion. We're a global nonprofit focused on creating a financially inclusive world. This is my 11-year-old son. He's getting ready for Halloween, and when he puts on his Spider-Man outfit, he tells me he has superpowers. I don't know if he has superpowers, but I believe that you have superpowers. I truly believe that the fintech revolution that we're living in can completely change the world. What do I mean? Distances that used to be insurmountable. You, today, with your superpowers, there's no distance that's insurmountable. Transaction sizes that used to be too small to be commercially viable. Today, with your powers, there's no such thing. Data analytics are allowing us to see individuals and small businesses that used to be invisible. So you have powers to truly change the world. So I do believe that if we can harness the digital revolution, we can reach 3 billion people who are left out of and poorly served by the global financial system. So why is financial inclusion important? All of us have credit cards and debit cards, and ATMs are available, and insurance to protect you from health or fire, or and credit to hopefully build a business and get a home. But for and all those tools make your life a lot easier. Think about this. You get paid roughly on a monthly basis, and your bills come in roughly on a monthly basis. And all of that makes your life a lot easier and convenient. But for 3 billion people, they lack access to, or they have really poor access to the global financial systems, and their lives are so much harder than they have to be. And for the first time in human history, we have tools that can really change that. That is exciting. That is the moment that we're living in. Just briefly, a little bit about Accion's background. So we grew up in microfinance. We started up in 1961 doing community development in Venezuela. And then in 1972, we said our clients need more than community development, they need capital. We started making small loans to the poor. Dr. Yunus was doing it in Bangladesh, others were doing it in Southeast Asia, and the beginning of microfinance, microcredit, microlending. Accion then built a string of nonprofits in almost every Latin American country and helped them grow and make small loans to the poor. In 1992, what was controversial then but now obvious, Accion created the world's first for-profit bank for the poor, Banco Sol in Bolivia. Banco Sol had been doing very well as a nonprofit, but of course, all of a sudden, when it could access the capital markets, it took off. All of a sudden, it could access the debt markets, the equity markets, it could hire talent in a different way. It was regulated in a different way. Later on, it could take deposits, and Banco Sol took off. We then went back to all those nonprofits and recreated them as for-profits and helped to build some of the great microfinance institutions in the world, including Banco Sol in Bolivia, Mi Banco in Peru, and of course, here in Mexico, Compartamos. And as you know, the Compartamos IPO gave us hundreds of millions of dollars to then pursue our vision of creating a financially inclusive world all around the world. We expanded from Latin America through several countries in Africa, India, China, and the Philippines, and most recently Myanmar. And this is our current portfolio of partners where we have significant equity stakes, but we're working with all of them to embrace new digital tools to help them reach their clients faster, better, cheaper, and safer, and reach clients that are not being reached today. We have a team of global advisors, about 60 people who go all around the world working with clients specifically to help them embrace new digital tools. It turns out right now this is very, very much in demand because all of these banks and microfinance institutions are trying to figure out how to use these tools to reach markets that they've never reached before. We also have the Center for Financial Inclusion, which is a global think tank dedicated to understanding and trying to solve some of the big problems that prevent us from reaching, or that have prevented us from reaching a financially inclusive world. We created the world's first consumer protection campaign for the poor called the SMART campaign, which is now the industry standard all around the world. And we partner with the Economist Intelligence Unit to rank countries all around the world on who's doing this well and who can do this better. And what I really want to talk today about is Fintech for inclusion. We created the Accion Frontier Inclusion Fund, which with our partner Quona, some of the partners are here today. And the thesis is Fintech for inclusion. And you're just seeing tremendous, tremendous innovation. Confio, based here in Mexico, David Aranya, I saw yesterday, is using 5,000 different data points to lend online to small businesses. That's probably more data and data analytics than any other company we've seen in the world. And he is, again, making small mom and pop shops that have been invisible are now becoming visible. SI, for example, is using the Internet of Things to have devices embedded to allow you to pay as you go for solar lamps. Instead of having to buy or borrow, buy a solar lamp or borrow for a solar lamp, you can pay as you go because there's a device that's embedded. All Life, for example, is the first company in the world to provide insurance for people diagnosed with AIDS. The innovation is so exciting, and most of what we want to talk about is what we call our venture lab portfolio. And this is all seed level investments. Again, the same thesis, Fintech for inclusion, but the exciting part about seed is as compared to incumbents have a hard time embracing innovation, but new startups don't. They build their whole company around the new technology. So these, in my mind, are some of the most exciting companies in the world, and we're still seeing what we call a pioneer gap, where these companies get started with money from friends and family, but then have a hard time getting to the next level. And we're almost always an investor, the first investor in after friends and family, and we help them get from seed to Series A and B. And I am delighted to introduce Tahira Dosani, who is the co-head of Venture Lab, the managing director, and we're going to chat about some of the innovation that we're seeing.
Thanks, Michael.
So first of all, let me just ask you a question. Over time, it used to be that you worked hard to find these companies. Now, increasingly, it feels like they find you. How do you find these companies?
It's a great question. You know, as you said, we're now in an age of technology where that technology can be leveraged to drive inclusion. But taking that technology and building a business out of it, building a viable business out of it, isn't easy. It's really hard to be an entrepreneur. It's hard to be a founder and to start this journey. And there's a lot that you need to do it, and a big thing that you need is capital. And so our goal really is to be that first institutional investor, to follow the friends and family money, to follow the angel money, but to take more risk than typical institutional investors will, to really come in and provide that large amount of capital that not only helps a company get to proof of concept, get to product market fit, but also that's a big indicator to the markets and shows other investors that we're willing to come in. Now, when we started, it really was, you know, we didn't have an established presence. Accion had a long history, but our work at the seed stage was new. And so it took a lot of work to identify the right startups. Now that we've made over 40 investments, we do have a bigger profile, a bigger brand, and we do see more inbound interest. We have more startups coming to us. But the reality is, for any venture investor, having feet on the street, being present, being in market, and having lots and lots of conversations is critical. For the 40 investments that we've made, we've looked at over 2,000 companies. And so it's a process.
So the big news is we're going to quadruple that. Could you talk about why we're quadrupling it and how we're quadrupling it?
So Venture Lab really started, you know, and grew out of Accion's history of being a first mover in investing and really in making commercial investments in financial inclusion. And Accion did that with microfinance. Accion did that with growth stage fintech through the Frontier Inclusion Fund and through Quona, and then with the founding of Venture Lab. And so, you know, we began to invest off of Accion's balance sheet. And that's what we did for our first several years. And we then hit an inflection point where we said we want to be able to mobilize a lot more capital into the early stage. And we want to be able to bring capital into deals. We want to follow on into those companies as they grow and scale, to be able to continue to provide them with capital, with support, but also so that we can learn from companies as they continue their journeys. And in order to do that effectively, we need more capital. The other thing that we wanted to do, though, was to give more exposure to other institutional investors and help them understand the dynamics at the seed stage. So bringing on third-party LPs, giving them exposure to the early stage. For most of the LPs that just came into our fund, this is the first time they're investing in a seed fund. And so, this really broadens their exposure. It helps them understand what's happening at that stage, the risks at that stage, the opportunities at that stage. So hopefully over time, they can start to make direct investments there and really increase the capital availability at that early stage.
So you mentioned you've looked at 2,000 companies to make 40 investments. Walk us through the process. How do you pick the companies that we invest in?
Finding the balance between being really rigorous as an investor, but also being agile, being flexible, being fast is really important. And there's a lot of entrepreneurs in this room, and I'm sure you will all agree that there's nothing worse than someone that strings you along for a long time only to say no, right? When you're fundraising, when you need capital, speed is important. And so we've really worked to create an investment process that is rigorous yet fast. And we're able to do that in part because of our specialization. We're specialized in terms of sector, only Fintech for inclusion. We're specialized in terms of stage. Every initial check we write to a company will be at the seed stage. And we're specialized through Fintech in serving a specific type of customer, a lower income and underserved customer. And so the capability, the knowledge, the experience that we've built around the needs of that customer, around business models in the Fintech space, around being that first institutional investor, let us be rigorous yet fast in our process. And so, we look at a company, we initially actually screen on impact. And that's a really important part of our process. We don't want to be in a place where we're saying, well, this company has less impact but more return potential, or vice versa. We really want to make impact a gating criteria for what we look at. So the first thing that we do is make a go, no-go decision based on whether the company meets our impact criteria. And our impact criteria are really focused on three things. First, the product. Is the core product that this business offers, the core driver of revenue for this business, is it something that addresses a barrier to financial inclusion, right? And what we don't want is something where the financial inclusion of the Fintech product is ancillary. It has to be central to the business. The second thing that we look at is quality, right? Not only does it have to address a key barrier to financial inclusion, it has to do so in a way that's good for the customer. As you referenced the SMART campaign earlier, the first global consumer protection set of standards. And as part of those standards, they have a definition of quality, right? And it includes things like fair pricing, transparent pricing, a proper mechanism for customer complaints to be heard. All of those types of things that are really important in ensuring a product is high quality, that it's good for the customer that we care about. So that quality piece has to be there. And then finally, the third element of impact for us is the customer. Is it a low-income customer? Is it someone who's underserved or unserved today? And so it's a yes or no. Either you meet all of our impact criteria and we move forward, or you don't meet them all and we stop there. Once we screen on impact, and if a company makes it through that impact screening, we then start to actually diligence the business. And that's where we're really looking at the market, right? Is there a real market need or opportunity? What is the total addressable market for this product? We're looking at the business and the revenue model. Now, at the early stage, you don't have years of financial history to look at. So what we're really looking at is, do we believe the unit economics can be viable at scale? And there's obviously a lot of assumptions that we're making there, but this is where our experience becomes relevant. And then the third thing that we look at there is, do we think this is the right team? Do we think that this is the team that can actually take this product or service to scale? And can they bring the right set of talent along, the right set of investors along, the right set of partners along to really do that?
So I'm going to brag about your record. Typically, seed-funded companies, about 25% of them ever get to Series A. Right now, this portfolio, it's pretty much 3 times that record, which is really, really exciting. Tell us the secret sauce, and in particular, I want to talk about portfolio engagement.
So, I think we recognize that seed is risky, and it's, Accion was able and willing to take that risk when most people weren't, right? Seed does have a high failure rate, and we recognize that. And so then the question becomes, how do you mitigate that risk? How do you help companies succeed when you know that there is going to be a lot of failure at the stage that you invest in? And there's a number of things that we like to do beyond just bringing capital to a company. I think capital is critical, right? No question about it. You have to have money to be able to invest in growth. But alongside that capital, if we can bring other types of support at the board level and below the board level, we can then increase that business's chance of viability and of scale. When we invest, given that we come in so early, many of these companies are just starting to form their boards. And so we play a really important role in not just ongoing governance, but in establishing good governance practices. And that's really important. We look to help companies think about how to set up a board effectively, but also how to leverage a board effectively, how to create the right governance, the right board committees, et cetera, for them to be able to succeed. And then we're very unique in that we put a lot of work in providing operational support and strategic support below the board level. And that's something that has been in Accion's DNA for a long time. You mentioned global advisory solutions, which really exist to provide that kind of support to financial institutions globally. And so building off of that, what VentureLab has done is actually create a team within the fund that is dedicated to providing support to companies. And we actually have a set of folks who spend time working with companies in 5 key areas. So we help companies think about business model and growth strategy. We help companies think about customer strategy, and especially at the early stage, customer strategy is so critical to growth. It includes customer segmentation or market segmentation, channel strategy, how are you acquiring your target customers once you've segmented your market and you know who your highest priority customers are? How are you engaging them? How are you retaining them, right? So how do you think about loyalty programs, churn management and retention? And how do you do everything that really drives to a higher customer lifetime value? Building upon the customer piece is product and pricing. So you know who your target customer is, you know how you're going to acquire them. How do you make sure that the product you're offering is really relevant to them and that it continues to be relevant throughout that customer's life cycle? How do you think about layering on additional products? How do you think about pricing? Not just making sure that the price is at the right level, but that it's structured in the right way, that it matches the income streams and cash flows of this customer who might have income streams and cash flows that are really irregular. Right? A smallholder farmer makes their money once a year. And so to charge them on a weekly basis or a monthly basis for a product doesn't work very well. So you have to define your product, design your product, distribute your product in the right way. You also have to price it correctly. So that's where we spend a lot of time with companies. We then also help them think about process and operations. How do you, on the back end, set up the right structure, the right operations? How do you use data effectively? How do you do everything that needs to be done to let you deliver to the right customer with the right product? And then finally, the fifth area that we work with companies on is human capital. How do you acquire, develop, and retain the talent that you need to deliver to your customers? And so we get really involved with companies that we invest in to help them grow. And I think that's something that has been instrumental to our success and something that we see as really important given that this space is still nascent and we're trying to grow it.
Yeah. So let's talk about some of the themes and the innovation that you're seeing. Yesterday I had the chance here in Mexico City to spend time with Confio, Tienda Pago, and Civico. And they are all focused on small business lending, leveraging data and data analytics. That seems to be a big theme. Could you talk a little bit about that? What are the trends you're seeing specifically around small business lending?
Yeah. So MSME finance, I think, is really critical, right? Small businesses are the engines of economic growth in most countries. They are some of the largest employers, and they really drive the economy. And yet, because they don't have formal financial histories, especially micro and small entrepreneurs, it's really hard for them to access capital. And that's working capital to manage their day-to-day business. It's also growth capital to help them expand, to help them scale, et cetera. And so around the world, we've invested in over a dozen small business finance models. It's really something that we see huge potential in. And there's really interesting ways to leverage data to better evaluate a small business. Whether it's using facturas and electronic receipts or invoices, whether it's plugging in, as Confio does or as Tienda Pago does, plugging into supply chains, using data from distributors, right? There's a wealth of data that is not being tapped into by traditional financial institutions today. And so we're seeing startups that are really first movers here, that are testing new sources of data to underwrite these customers. So, MSME finance, I think, continues to be a real area of interest. We're also, yesterday here was dedicated to InsurTech. I mean, that's, I think, another area that we see huge potential in. Insurance is something that, InsurTech is growing rapidly. But when you think about InsurTech for inclusion, it's particularly valuable. Because when someone is low income, they're not statically low income. They work, they're saving, they're building up, but then something happens, right? Someone loses their job. A breadwinner in the family dies. Someone gets sick. A car breaks down. And they don't have a cushion. They don't have a safety net. And so maybe they can try and borrow in those times, but that's really tough. Insurance is that safety net. And insurance is not only a safety net, it's also a springboard. It lets people take the right kinds of calculated risks that let them move out of poverty. But with, insurance is something that's also really hard to sell, right? With credit, I'm going to give you some money, you can pay me back later. With insurance, it's you should give me some money, and you should keep giving me money every month, and then maybe later, if something bad happens, I'll give some of it back to you. That's a pretty tough proposition to sell. And so finding insurance models that are really designed for the underserved, that take into account the fact that it's really tough to part with your money if you don't trust an institution, right? The trust proposition is tough there. And so I think finding those models, finding companies that are using a lot of the innovation actually that we've seen in the credit space over the past several years, the use of alternative data for underwriting, for example, and bring that to the insurance space. But then also be really thoughtful about product design, about bundling, about building trust, which are really critical in selling insurance.
So just a little more specifically, some of the insurance innovation that we're seeing, Toffee and Pula and Limkani, do you want to describe those models a little bit?
Absolutely. We've invested in InsurTech models in South Asia, in Africa, and I think the things that are really unique about those is that those are models where the product is so specifically targeted to the customer. So Toffee, which operates in India, focuses not on selling someone a comprehensive policy, but says, I'm going to offer you a product that's targeted to a very specific pain point that you feel, right? So you're generally healthy. You might not be worried about getting sick. You might not be willing to buy a large health policy. But you live in an area where there's risk of a specific illness at a certain time of year. Could be dengue fever, malaria, anything. And so we can sell you a micro policy where for $5, you protect yourself against that, right? So really unique product design there. A company like Pula, which insures smallholder farmers, I think what they've done is not only designed a specific product, but also thought about distribution. They bundled that product along with the seed. So you don't have to make a separate purchase. It's bundled in when you buy seed, right? So that element of the product design of the distribution are really critical. So those are just a couple of examples.
Fantastic. Other trends?
Yeah, I think those are two big ones. But I think there's a number of other things that we're really interested in. One is that we're seeing the economy change globally, right? The nature of work is different today than it used to be. We have more people who are gig workers, who are freelancers, who are independently employed, right? If you are an Uber driver, or all of the companies like Uber that allow people to be self-employed, well, they aren't getting the financial tools that they might have historically gotten through an employer. So looking at financial tools and products that are targeted towards that segment of the population, I think is really interesting, and that's something that we continue to look at. And broadly, one of the other things that we're really interested in is personal financial management and financial health. There's a big difference between being wealthy and being financially healthy. And it's maybe easier to be financially healthy if you are wealthier, but those two things aren't necessarily correlated or aren't necessarily, financial health is not a given, even if you have money. And so products that help someone manage their finances, help them manage their day-to-day, help them be resilient against shocks and adverse events that might hit them, but also that help them plan for a better future are really interesting, really important.
So this is like asking you to pick your favorite child. Is there one of these companies that sort of is very special, and more particularly for you, was there like a great portfolio engagement experience that just sort of was special for you?
Yeah, it's really hard to pick a favorite, but I think there's things about each of these models that are really unique and that are really special, and it is incredibly gratifying when we get to work with the entrepreneurs on addressing the biggest challenges they face. I'm really lucky in what I do, right? I get to spend my days surrounded by passionate entrepreneurs who are at the cutting edge of innovation and technology that are working on really challenging issues, and I get to work with them and help them through some of their big challenges. And so, for us, getting to not just invest, but then work side by side with these entrepreneurs, getting to help them think about how they should design a new product. We spent, over the summer, one of our companies in the US, it's a company that's called Selflender, and they work to help people who are credit damaged rebuild their credit score, or help them rehabilitate. And they decided that they were going to launch a second product. And so we worked with them really closely on the design and development of that product. And it's a secured credit card product. And it was really interesting to think about the design of that product, not just from a growth perspective and a scale perspective, but also from an impact perspective. Right. So when you're trying to design a credit card, there's a few things that you can do to drive revenue from that card. You can have an annual fee, and then you have your interest rate or your APR on the card. And initially, there was well, we want this to be accessible to everyone, so we don't want a high annual fee, or maybe even no annual fee at all. Can we do a negative annual fee? We were getting really kind of innovative around making this product accessible. But then we also looked at it from an impact perspective, and we said, if we are reliant on the APR to make money, what that means is where the company is driving revenue, it's in a place that's not necessarily tied to the best interest of the customer, right? For the customer, for someone especially who's been credit damaged, the best solution is for them to not carry a balance month to month. Right. And if we want to help them do that, then we can't have a revenue model that's dependent on them doing that, right? So we ended up making a product design decision that was not only thinking about the growth of the product, but thinking about aligning incentives between the financial health of the customer and the revenue of the business.
So we're out of time. I'm going to ask you one last question. We're going to quadruple this. So the first thing is we need a bigger screen. But if we come back in a year or two or three, how is this going to be different besides being more crowded? Where do you think this is going?
It's a great question, and I think there's a number of places where this is going. I think, first of all, it's going to definitely be more crowded, but I think it's not just going to be us. It's not going to be just Venture Lab investing in more startups. It's going to be more capital available to the early stage. That's already changed from what it was, 5-7 years ago, and I think that's going to continue to change. We want to see more investors willing to take early stage risk because they're seeing that you can drive returns at the early stage, right? So I think that's one thing. I also think that we're going to see, we're global. There's a lot of countries that we've invested in that our companies are operating in. But I think we're going to see more investments even in smaller markets.
Great.
I think we're going to see innovation not just happen in Mexico City and Sao Paulo in the region. We're going to see a whole new set of cities and more entrepreneurs entering the space.
Well, I'm going to go home and tell my 11-year-old son that you're using your superpowers for good. Thank you very much.